ahead, Andre.
Yeah. Can we zoom in a little bit? Can we move the flip tool and zoom in a bit?
Yeah. You want to control the screen?
No, thanks.
No? All right. What are we looking at?
Like, let's look at it like we're gonna trade the weekly. Candles are just a little bit too fine, a little small.
Okay. If I'm gonna trade the weekly, then
Right,
already.
it's a little bigger there. Perfect.
Yeah.
So we had I had charted and we had consulted and charted this before. We found like a demand zone right where price hit and turned, right?
Yeah.
So what happened was, because I'm not too afraid with the counter trend trading. I knew it was demand. I knew that prices will hit demand and there will be a reaction, but I did not anticipate it going all the way back up to weekly demand supply where it's heading to right now.
Right.
Well, what I did was I had add-ons, which I'm not mad at because I know the overall macro direction of the market, right? So adjust a position size appropriately. So when it turns around, I'll be fine,
Yeah.
hopefully, you know what I'm saying? So it's
Yeah.
the waiting game right now. But my thing is, how in a situation like this next time when prices do come back down, because there's a demand zone just below we
Is
see
there?
that, yeah, right there. Exactly. So is it possible for the same thing to occur like what happened the last time?
Yeah, it is possible.
So my thing is, how would a novice trader now look at that instead of jumping in right away for the trade and just setting a BSO above his demand zone? Is there a way for confirmation, something to look at where you can say, all right, you know what, maybe you broke the 4 hour structure, maybe you broke the daily structure, so now I could take the chance and pushing it up, or take the chance to buy it up to my short, an area where it would short? What can a person look at for confirmation? Not necessarily to catch the whole move, but to catch a safe move.
A safe move to the upside?
Yeah,
Okay.
after it hits demand.
Yeah. So if you were going to catch it to the upside,
No,
then
not right now where it's at. So I'm thinking. So what I'm doing is
yeah. So based on right now where it's at, you're saying, what should you do from here?
based on right now where it's at. The next time it hits demand.
Oh, next time it hits this.
Yeah.
So your question is, when it hits this, then what?
What would be the best way to decide or use as a confirmation to counter trend trade, as opposed to just keep adding short positions?
Uh, how you does your account allow you to trade both ways?
It does not.
Okay. So then you can't do that. So how are you going to go long with your short positions?
That's what I'm saying. In a situation, because the last time that happened, which is current day, where it came down, I actually TP'd. I actually TP'd before the demand zone and started to add positions because I did expect to bounce back. Yeah, right there, I TP'd right just before there. Yeah.
Yeah.
And then I started adding more short positions, not knowing how far back prices would have gone to. So what I'm saying is, I don't mind TPing on the way down when it comes back down. But when
Right.
it hits that demand, I'm trying to be able to maneuver to say, all right, you know what? Will this demand hold? Will it not hold? Should I even try to trade it to buy the demand, buy it up, or just keep adding
Okay.
short positions? So
Okay.
that's what I'm trying to figure out. What can I use to improve my decision matrix?
You already have the information that you need.
Yeah.
So people like yourself and Devin, you guys already are speaking the language. You already know how to trade. Your thing that you're working on now is not how to trade. It's how to take the science of trading and the theories of trading and use that with the tools that you already have. So looking at this, based on what you're saying, you're just not seeing it correctly,
Mm.
which is the reason why you're saying, should I buy down here? By saying, should I buy down here? because this thing could hit this and go back up. And I think that's exactly what it's going to do. I think it's going to hit this and it's going to pull back again. Now, is it going to hold forever? No, I think we're going to get a bounce off of it. It's going to pull back and then we're going to end up shorting again. But I would not buy here at all. The only thing I would do is keep doing add-ons to the short side. And I'm going to show you why. That's why I put this blue line here. So we already had this. Now, being way up here, would you go long here? Now that you see the big picture?
But it's pretty much the same situation, and you went long.
I did go long, but there's a reason why I went long. And I didn't go long just because this was here. I went long because Dixie was in supply at the time that price came down here. And Dixie was in very strong supply on that 2-day. I've been waiting 2 months for that thing to come down out of supply. So if Dixie's going to come down and go to that support range, ASEAN's going to have to shoot up very strong, very hard, and very high. And already this thing has moved almost 500 pips. That's the reason why I went long. So you cannot isolate your decision to just simply, this is a demand zone. Should I go long here? Because if price action comes down here and it's in this demand level and Dixie is in, some type of demand as well, what do you think is going to happen when Dixie's in demand?
If Dixie's in demand and this hits the demand right here, this is going to blow through.
Correct. So that's the answer. The answer is not, do I go long with a buy limit order right here just simply because it's demand? No, you go long because it's demand and everything else in the market tells you that that's going to go long. You never make an isolated decision just from the candlesticks only. I can show you a whole bunch of drop-based drops and rally-based rallies that got blown through. Why? Because they were the right formations in the wrong location. Is this in the right location?
Sure.
Huh?
No.
No, it's not. It's in the wrong location. This demand is in the wrong location. You should not be buying here unless the market tells you it's okay to buy here. So I only bought because the market said so. I didn't buy just because this is demand. And this didn't even work out. This blue line is demand, not this. This thing bounced off of the immediate retest that was pointing to the demand. And that's good of you to have put your TP here. I do that all the time. My TP is always at the immediate retest for this very reason. Just because I have an immediate retest pointing to demand doesn't mean it's going to go all the way down there before going up. There's no guarantee of anything. So my answer to you would be, yes, I'm going to go long if Dixie is in support at the time, or in supply, I'm sorry. If Dixie's in supply at the time that this thing is in demand, like when price action comes back down and gets here, if Dixie is in supply, then that means, and it starts to go down, that means this thing's going back up again and the range is going to continue. But if Dixie is in demand at the time that price action gets here, that means Dixie's going to go up and this is going to get blown through. A zone is most likely going to get created here, some type of supply zone, and it's going to continue shorting. So I cannot answer the question other than, yes, this is demand because we have a nice immediate retest. Will it hold? And how far back it's going to go? I don't know the answer yet because I don't have enough information. The candles are not down here. I don't have any supply created or resistance created yet for me to look at to see how far back it would go. And I don't know where Dixie is going to be at the time that this as at the time that price action gets down here. So it doesn't have anything to do with your trading. It has to do with you being able to theorize your trades. Take the information you already have and put it together. What you're doing is what novices do. They isolate and they get tunnel vision and they only see the chart and that's it. That's the worst thing you could do. I don't trade euro dollar by itself. I trade euro dollar with other things. I don't just trade euro dollar. So when I trade euro dollar, I'm looking at Aussie dollar. I'm looking at euro yen. I'm looking at Aussie yen. I'm looking at Dixie. I'm looking at a few things. Even Bitcoin. Bitcoin and euro dollar go the same direction. So if I see Bitcoin's about to go up, euro dollar is most likely going to go up. So I'm looking at different things to come up with my answer, which is why my trades are so accurate. It's because I'm not isolated to one thing. I'm looking at everything. So that's the answer. That's the true answer to the question. Even though I can't give you an exact answer, that is still the true answer. You have to put your tools together to do that. Make sense?
Sure.
All right. Any other questions about anything? No.
Yeah, you using your eyes on Tuesday?
Do I use my eyes?
Yeah, just take your eyes for a little bit. Don't worry about it. Bring them back. Don't worry.
Yes, sir.
Oh,
So
One last question, Prof.
yeah, go ahead.
All right. Do you remember when I asked you about the current price and how it's just being formed, right?
Yeah.
When I look at current price right now, right on the 4-week, right?
Yeah.
I already see where my current price pivot high and pivot low is.
Yeah.
Right? Now,
Yeah.
just like what I was talking about in the group. Now, if I look back a few months before, like maybe maybe about 3 months behind.
What is your current price pivot high and pivot low?
My current price pivot high and pivot low would have
Just
been,
circle it on your phone or computer.
how do I do that? Annotate again.
Are you on your phone or a computer?
I'm on the computer. Kai's great with the annotate. There we go.
Oh, man.
Pivot low for current price.
Okay.
Right?
And that is incorrect.
That's incorrect?
Incorrect. Yes.
yeah, it's not right.
That's why I asked you, because I wanted to make sure you had the right pivots.
Yeah. So what's going on there?
No, that I understand what you're saying, that it's the current price pivot high and pivot low, but that's you're close, but this is the answer here.
Mm-hmm. Okay, perfect.
Those are your pivots. And the reason why these are your pivots is because you have to ask yourself, where did this come from?
Yeah.
This was recently created. So is it your current price pivot low? Yes, it is. Is it your current price pivot high? Yes. So you got that correct, but it's still wrong, even though I get what you were going for. This strong move here, price action was in a downtrend and something strong caused it to reverse. And that's why this wick was created. Something very strong pushed the market back up. And when it came up here, something very strong pushed the market down. And when it came down, it hit demand. And now it's on its way up to supply. Supply has not been satisfied yet with these two pivots. You have to pick the pivots where both supply and demand have not been satisfied. And so the previous pivots, your pivots are correct here, but the only reason why they're wrong right now is because the previous two pivots have not been satisfied yet. That's how you know you can't move on to the next pivots like this, because this is not satisfied. The only thing satisfied on these two pivots is demand, but there is no supply. It's just now hitting 75%. But remember, it can't hit 75. It has to go above it. It has to be in this area. It can't hit the area and come down. It has to be in it. So we do not have price action in supply on the 4-week yet. That's the reason why those pivots are incorrect. And that's the reason why the trend is still up. And the trend is still up because Dixie is still down. So you also know that's why this is going to go up a little higher into here. So you have to, make sure you're dialing in the proper pivots, because without the proper pivot, you'll just look at this and you'll say, oh, here's supply right here. It's already hit it. It should be on its way down. And then you'll put a market order to short, and that thing's going to go up another 100 pips. And you'll be trying to figure out what did you do wrong. What you did wrong was you didn't have your pivots correct, which was this. Supply is not satisfied. It looks satisfied without the fib tool because it went above this, but it's not satisfied yet because 75 is just, it barely touched it. So that's how you know it's not over yet.
Yeah. So can you put back your fib tool on pivot high and pivot low real quick?
Okay.
Yeah. So what I was getting to is this. Seeing that just before we identified demand, right?
Okay.
At the pivot low. Looking at this on the 4-week, I still see a demand formation from the newly formed demand, right? It's
correct.
flush. It's right there. It's on the 4-week on the high time frame. It shows some kind of strength, some kind of integrity. Would you just still consider that as support as opposed to demand, or do you look at that as demand? It's going to be below 25 when you cut down the time frames. So do you also so now I'm wondering, which one do you even expect a reaction from that one, the one below, or both of them?
You mean from something down here or here?
Yes, sir.
Oh no, I'm going to expect a reaction from this.
All right.
And the reason why I'm going to expect a reaction from this is because when this thing goes up and it satisfies supply up here, what does that mean for this pivot and this pivot?
Means they're already used up. It's done. It's both have been supplied, both have been satisfied.
Very good. So now that they're both satisfied and this thing is up here, I now have to move either my pivot high or my pivot low. And the only one that I can move is this one, because this would have been the last one. This one is would have been still going up. So now when it comes down, this is basically coming down into demand. And it's going to hit this. And
because did it satisfy demand, or did it just turn off of that immediate retest? Was the demand, because there's another demand zone right below, right where pivot low is. So is it that you're saying that demand is, we're just gonna ignore that demand at that point?
You mean this one down here?
Yeah.
No, I'm not going to ignore it.
Yeah, so that's what I'm saying. So if we're gonna move once supply is satisfied, why are we going to then move the pivot up? And that demand has not been satisfied yet. Because
if you're trading, what the question you're asking me is day trading. It's a day trading question.
Yeah.
Okay, so if you're going to day trade this, then you have to trade back and forth. And if you're going to trade back and forth, these are the proper pivots, but you can see clearly it already satisfied demand here twice already. There's another demand level down here. So we have two, and we call these levels on levels, meaning you can have more than one demand level in demand. Demand is anything below 25%. So is it going to hit this? Yes. And it's going to react to it. And is it going to hit this and react to it? Yes. It's going to do both. And if you're a day trader and you're going to go long on this, you're taking a risk, because this is in the wrong location. We're calling this demand, but it's only demand on the 1 day. It's not demand on the big picture. On the big picture, this blue line is fiddling in the middle. It's not demand at all. So if it's not, if it's demand on the 1 day, but on the big picture, what is this blue line?
1 day, that's demand.
So on the 1 day, it's demand.
Mm-hmm.
But if I go to the 4 week or something, now what is my blue line? I'll get rid of the fib. What is my blue line now?
Line is now support.
Very good. Which one is more important, the 1 day or the 4 week?
The 4 week.
So if the 4 week says it's support, you should treat it like that. Does support always hold?
Sure.
Nope. So you need to be, that's why I'm saying you got to go back to the theories. If I'm a day trader, then yeah, I'm gonna go ahead and take it, because my day trading strategy tells me if it gets down to demand, you go long. But this is the reason why so many people lose money, novices lose money trading. They don't see the big picture. They just see these levels here, which are demand, not realizing this is just support on the high time frame. So will you get a bounce off of it? Yeah, but it won't hold. It's not, the trend is not going to change off of this and turn around. You're just going to get however many pips you're going to get off of this move, which is probably going to be up here, because look at all of this all the way across. Now, depending on where Dixie is when price action gets here, if I were a day trader, would I go long? Yeah, that's a lot of money. That's a lot of pips. From here to here, 287 pips. So yeah, I would go long. But it depends on what the rest of the market is doing at the time that price action gets down here. If the rest of the market is, if Eurodollar and Dixie and all of that stuff lines up and it says Eurodollar shorting and Dixie's going long, when price action gets down here, then I'm not going to go long here. I'm going to do some type of sell stop order and short it. That's what I'm going to do. So again, it goes back to the same answer of it all depends. It depends on what's happening in the rest of the world or the rest of the market. But you're correct. That is demand. But then, so understand the words that you're using, they're interchangeable depending on the strategy. Don't lock yourself into one way of thinking. Don't go, well, this is demand, so why aren't you going long? Well, because on the big picture, it's not demand. That's why I'm not going long. So you can't lock yourself into one way of looking at the charts. You have to be open. That's why I'm considered an analyst. I'm not a day trader. I'm not a swing trader. I'm not a position trader. I'm just an analyst. I analyze the market, and whatever the market is doing, I'm just going to do what the market's doing. I'm not stuck with one thing. So many people just want to day trade, or they just want to swing trade, they just want to position trade, they just want to scout. You're stuck. And when you do that, that's how you lose money. So you want to be able to see the big picture. And one analogy I'll use, and then we'll call it a night. Unless Devin has a question, we'll call it a night. But one analogy I like to use is this. We have driver's licenses, and you can get your Class A, your Class B, your Class C driver's license, and you can drive however you drive whatever it is you want to drive. But there's nothing wrong with driving a motorcycle, a car, or a Mack truck, an 18-wheeler big rig truck. It doesn't matter which one you drive. All three, answer me this question, will they get you, Andre, from point A to point B?
Sure.
Absolutely. So if somebody were to say, Professor, why you don't ride motorcycles? Well, it's not that I don't ride motorcycles. I'm just not riding one today. Well, why aren't you riding one today? Well, because I'm hauling something, and the motorcycle is not going to help me do that. I need to haul something. So I'm going to get in this big truck because I need to put something in the truck. Or why are you riding the car today? Well, because I'm with my family. I can't put my family on a motorcycle. So I'm not stuck. I'm like the guy that has all the licenses. I drive whatever I need to drive based on what I'm trying to accomplish. And so that's what you have to do. One day you might wake up and want to day trade. Another day you might wake up and want to scout. Another day you might see an opportunity for a wealth trade. It just depends. And based on what you're trying to do, that's going to determine what this is. So if I'm day trading, this is demand. If I'm position trading, this is support. It just depends on what you're doing. There is no concrete answer. Treat trading like a relationship. There is no book, well, other than the Bible, but there's no real book to tell you how to love somebody and what to do in every single situation. It's just situational. It's moment by moment. And you got to adjust as the relationship changes, because your mate might get sick. You have to love that person differently than when they're well. You don't play around and kid when somebody doesn't feel well. You don't do jokes when people don't feel well. You comfort them, and you do whatever you need to do to make them, feel better. And you adjust. So that's what I'm trying to get you to realize on here. Don't get stuck on, I see demand, I see supply, I see a rally-based rally, I see a drop-based drop, and you're just stuck on doing whatever that formation says. If you do that, if you trade that way, you're no differently than the novice trader that trades wedges or springs or indicators. They're stuck. People who do that, they can't trade any other way. Without their indicators, they can't trade. Without volume, they just can't trade. Without this, they can't trade. Those people are stuck, and because they're stuck, when the market is not moving in a day trade way, they start losing money. Why? Because they didn't see the market is no longer in a day trade position. It's in a swing position, or it's in a long-term position. It just depends. So there's just no concrete answer to that. And once you dial that in, you'll be fine. Both of you already have enough information to trade consistently and successfully. You just got to get your theories down and the science behind trading down. And you got to think of it all. It's kind of like a person with a driver's license. Yeah, you passed the test, but now you got to get behind the wheel. And in your test, it didn't say nothing about the damn squirrel that's running across the road or the ball that went across the road. There's no book for that. You have to take the information you learned in the book and try to apply it in real life. And don't be stuck. Don't go, well, why did you hit the animal, or ran over the ball, or hit the little kid? Well, I'm driving, I'm in the right of way, and the speed limit is 25 miles an hour, and I was doing it. The ball shouldn't have gotten in my way. I was obeying what I read in my book. Don't do that. So when we teach you things, we're teaching you just how to look at it and how to understand it, but keep everything in mind, keep the big picture scope in mind, and learn how to apply the concepts on every chart so that you can truthfully see it for what it actually is. Does that help? I know that was long, but did that help?
Yes, sir.
All right, awesome. You have a question, Devin, before we get out of here?
Alan, thanks for that explanation.
Oh, you're welcome.
With satisfying the demand and the supply.
Yes. Yeah.
But because it seemed like you could, from what I get from that, is like if I go on the day or maybe 3 hour, and
Right.
I pick a pivot and a pivot higher, pivot lower, whatever, and I could see you're saying that it's going to go up until it satisfies that particular demand on the 3 hour.
Correct. Yep.
And if I'm looking for a short-term trade or whatever. So that was interesting. Thank you.
Yes. So if I'm looking at this 3 hour and I'm trying to day trade, if I'm day trading, I'm just going to look for support and resistance. That's it. There's no point. If you're swing trading, you should be looking for supply and demand. But if you're day trading, you should be trading support and resistance. That's how you know which one to use. So it depends on your strategy. But if I were day trading this, I would find support, which would be here, all the way across. You can see clearly that that's support. That's the reason why I bounced off of that and went up. Where is it going? Most likely to the top of this. Easy. So I get in, go long, and I get out up here because that's the end. Because now I have some resistance sitting up here. If I'm a day trader. And then if I trade this, I'm going to get in here and trade this down to where? Maybe down to here. I'm going to get out because I'm a day trader. And I'm going to keep doing that back and forth until everything is satisfied.
Great. Thank you.
You're welcome. All right, you guys, we'll have a great night. And then I'll see you guys on the other side.